And while it may not come today, one of our next guests believes we aren't far away from the first rate cut of 2025. He says it's coming in July and that we'll get 1.5 points of total cuts through early next year. Lebas is the chief fixed income strategist at Janney Montgomery Scott. And Greg Ip is back with us. He's the Wall Street Journal's chief economics commentator. Great to have you guys both here. Guy, first up to you. So rate cuts would be music to the president's ears.
Well, I would say that these rate cuts that we anticipate, and let me just emphasize that because the economic outlook is unusually uncertain today, our confidence in that assessment is relatively low. These rate cuts will be coming for not great reasons, right? We expect some economic downside ahead, may or may not include the big R word. But particularly as stems from transportation, hospitality, and retail-related jobs, we think there's some downside risks that could emerge as soon as the June economic data released in July, and therefore in time for the Federal Reserve's July meeting. The most likely soon chance for those rate cuts to emerge.
Do you think, this is kind of the gamesmanship for markets and everything into this decision, Guy, so do you think it will be a dovish hold?
Today, I think it's going to be a neutral hold in the sense that Powell and his colleagues really are in a position of not having any data to respond or to give them information about what the economic outlook looks like from the post-tariff period. You know, we in markets, we really want things to evolve super quickly in the real economy. That's simply not how it works, right? We're a whopping 4 weeks out from those big announcements. And frankly, corporations are only now deciding what they're likely to do with staffing needs. And so it's going to take some months for those economic effects to play out. It's not going to happen nearly as fast as we all in markets hope it will.
Greg, what are you going to be watching for in the next few minutes? So we obviously get the 2 p.m. decision. We'll hear from the Fed chair himself at 2:30. Sometimes that's a bigger market mover, although the last couple of meetings it's died down a little bit.
Well, I think if you go back to his comments in Chicago, I think it was a few weeks ago, the giveaway was when he said, look, tariffs present risks on both sides of our mandate. They put upward pressure on inflation and downward pressure on employment. At the end of the day, you can't have good employment and outcomes without price stability. I'm paraphrasing, but that was in some sense the tell, which is that between those two sides of the mandate, Powell was going to prioritize keeping inflation down. That was, I think, correctly seen as hawkish. It meant that he had a high bar to responding to weak growth numbers insofar as he was still worried about inflation. If he repeats that formulation in his press conference today, I think that'll be the main thing I'll be looking for, and I think it'll be the main takeaway.
Do we get projections, you know, their dots, so to speak, their forecasts where each member kind of tells us, here's what I think is going to happen, and we can all use it as clues to their thinking?
No, this is not an SEP. Sorry, I get slipping back in my Fed speak there. This is not one of the meetings where they release projections, but I wouldn't be surprised if he's asked about it, and if he updates us on where the committee's views are. So, for example, I think that people were taken aback when, in March, they really took down their growth outlook and moved up their inflation outlook somewhat. And by the way, that was before April 2nd, you know, and
True.
the bulk of the tariff announcements. Now, to be sure, since April 2nd, the president has walked back a lot of that stuff. And by the way, I suspect that after the meeting between the U.S. and Chinese officials in Switzerland, there will be more walking back after that. All that said, this will be an important mark-to-market moment for the chairman to tell us how has the outlook changed on both the on both the employment and growth front and the inflation front since the committee last met.
I think that's a really helpful kind of the language to watch that he may use. Guy, what are you watching both in the decision and then expecting we might hear or not hear from the chair at 2:30?
Yes, so I wouldn't expect a lot from the FOMC statement, again, on the basis that there's not a lot of economic data that's new and valid since the big tariff announcement, or frankly, some of the walkbacks that Greg mentioned a moment ago. What I am on the lookout for is actually echoes of language from Chris Waller, a member of the Fed board who gave the last big pre-blackout period interview roughly 2 weeks ago. And essentially, and again, I'm just as Greg did a moment ago, I'm sort of paraphrasing, reading between the lines a little bit. Waller emphasized quite clearly that if there is jobs downside, he expects and he would want the Federal Reserve to react quite quickly to that. So even though there is some balance and risks to both sides of the mandate, I think the response to the jobs and weaker growth side of the mandate is likely to come faster. And that's one reason the outlook, I think, is skewed when you look at the interest rate markets as well.